Tesla to $1,000 or $500 a share after announcing 500,000 vehicles sold in 2020 as we head into 2021 is our story for today. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. Without your assistance, the channel does not exist. Therefore, we greatly appreciate it. We also want to encourage you to like and subscribe. By subscribing, you preserve your ability to make comments, etc. And there are other benefits that go with that, so we'd appreciate if you would do so. The next thing we wanted to review is that we're a constructive comment section. So if your goal is simply negative, evil comments, you'll likely be deleted and blocked. So we'd appreciate if you would take the time to enjoy the smart people that are on our site, as well as enjoy the environment without having to be offensive. So today's a very interesting day. We just finished up the year. Tesla did 500,000 vehicles. It's actually, for the sticklers, it's 499,500 vehicles that were actually produced and delivered. Turns out that the total number of vehicles was about 509,000, but we have to look at what actual deliveries were versus how many vehicles were produced. So I've sort of delayed my response to this information actually coming out on Saturday, because it's really nice to run down what the numbers are. And as you extrapolate all the other numbers around that production number, we're going to find out in 3 weeks what Tesla's earnings number is going to be, which is good news. The problem that comes up is whenever you look at a market, what a market by definition is a disagreement about the price of a certain asset. So in this case, we're kind of looking at a show that we're sort of exploring some of the issues. I've shared with you before, there's an Indian principle I learned about regarding the 5 blind men and the elephant, and the fact that there are actually 5 different blind men holding different parts of the elephant, and they know that their portion of the elephant is exactly the truth, and therefore they can make extrapolations from that about what an elephant looks like, etc. And in this conversation today, there's the elephant of Tesla's stock price, the company, and how it's performing and how the future looks. And the goal is really to sort of look at things from a few different angles to assist. The first thing I wanted to point out is that we've encouraged all of our viewers, as many as possible, to get a copy and read a book called One Up on Wall Street by Peter Lynch. It turns out that Peter Lynch is considered perhaps the best sort of large-scale money manager ever. He rivals the folks at Warren Buffett and company, at Berkshire Hathaway, in terms of returns over time, etc. And a lot of the core processes used within large institutions are reflected in what is taught by Peter Lynch. And the book is only 120 pages, but it covers a lot of information that helps with what's called bottom-up analysis, the most basic sort of how do you analyze a stock, how do you analyze a company, etc. And it's considered one of the Bibles of the industry. I know there's a lot of folks that view our channel that manage fairly large dollar portfolios that they've done well with, particularly investing in Tesla. But it's really a good idea to go backwards and try to backfill with quality research and analysis information that would be supportive of your being able to invest, trade better. And Peter Lynch is one of the critical components of that. We also wanted to encourage you to take a look at Taleb's book called The Black Swan. It turns out that 1 out of every 100,000 swans is black. And so black swan trading focuses on a trading strategy where you anticipate fairly unexpected issues in your trading process, and it can actually be very lucrative in that process. we'll have more information on this if there's interest. We'll sort of dive into this, certainly for our Patreon subscribers and in other ways as we have over time. So right now, we have a very interesting situation going on that's illustrated in a number of different ways. So the big question mark right now isn't how many vehicles did Tesla produce. It's how many production and sales are they going to do going forward and on what time frame, and what are the implications of that in terms of sales and investing in their stock. So kind of one of the fun caveats here is it turns out that a lot of people think that Elon's process doesn't mirror excellent process described by Peter Lynch, but it turns out that Elon hides a lot of information, and if you dig enough, you can get comfortable enough around what they're up to. For example, the start of the China Model Y reservation started in June. Tesla went beyond 100,000 reservations for that, and I think the number before the current push was up in the 150,000 unit zone. So right now, certainly they're going to sell Model 3s in China, particularly if we have access to supercharger power there. But now Model Y is hitting, and there's a backlog. And how big is that backlog? For sure, Elon and Tesla are not saying. Prior to the latest push, after the numbers were seen, we went to initially 150K that were reserved between, let's say, June 1st of this year up to, let's say, December 1st. And then once we got this new number, it was stated that another 100,000 vehicles were ordered of the Model Y in China. And so, again, this isn't official. There are a number of sources that are reporting this. And we already had it at 150K prior, and we weren't worried about the latest number. And the main reason is that currently, from our analysis, with the Model Y's production starting, the China facilities have a target this year of being able to produce 500,000 cars. And those vehicles can be flexed between the Model 3 and Model Y as needed. So we have an interesting situation here where we're expecting for the number of Model 3s to decline, number of Model Ys to increase. But the question that comes up is, certainly you want to know what those raw numbers are. How do those numbers play against what the analyst recommendations are? So you'll notice with our channel, we spend a lot of time talking about, well, how do institutional managers look at the situation? Why? Look at how the analysts work with those firms and why. And the main reason is that those guys control, because of Elon's control, 75% of the shares are in the hands of these very large money managers. You could say some of them are hedge fund folks, but in general, they're large institutions that own large numbers of shares, and they very rarely go down to zero. They often may trim, may increase, but they rarely go to zero. And so in theory, in portfolio theory, 60% of the shares, because of the recent S&P activity of Tesla, sit in the hands of long-term institutions that are on a 2, 3, 4 year time frame or never sell time frame, as in the case of the S&P. So we're in an unknown zone of where we are with Tesla. For example, if in fact some of the numbers we've talked about over time, which is Elon and his buddies control 25% of the shares and they're not selling, now we look at 60% of the shares owned by institutions, and they rarely, if ever, trade or sell, maybe between each other, but it stays large institutions in ownership at those prices. We're kind of in an interesting zone because in theory we have 15% of the shares available to be traded. But the problem that happens is that, for example, there are large institutions that include your shares if you own them as part of some kind of fund. There are a lot of these institutions that have rules that indicate that they're allowed to lend those shares out. So, for example, if somebody wanted to short Tesla stock for a fee, the shares are not being sold by the institutions. They're just lending them to other entities for a price. And those entities are eager to try to make money off of, hopefully, downward fluctuations. But in theory, it could be upward drafts for the stock with certain trading techniques. So we have a thin amount of shares to be traded. And that thin amount sort of creates issues of its own. So we're kind of in a rebalancing process right now to figure out, after the S&P ownership increase, what behavior will Tesla shares take on? In theory, they could take on the behavior of very little happening, very slow movement. On the other hand, if only a small segment, 10, 15% of the shares are available to be traded, you could have wild swings in the stock price, because it doesn't take a lot by one individual of buying or other techniques to move the stock dramatically, because in theory, there's only $150 billion or so if it's 15% of the shares, and you got $600 billion market cap. 120 billion determines what's going to happen with Tesla's stock price, up or down. And so now you have a fairly small number of shares there, which I think could be moved or manipulated a lot easier than trying to manipulate 300 billion, 400 billion, if that were the shares that were freely floating. So an example of what I wanted to cover today is what happened on Friday. So as you may recall, we've talked about something called a pin. And what happened was, I'm told that there's all kinds of technical people who explain how this works. But the way I figured it out was that I was a heavy trader of options for 3 or 4 years, maybe 5 years, 20 years ago. And we noticed a very strange phenomenon, which was that every Friday, on the Fridays of expiration, and in the old days it used to be only one Friday a month, now it's every Friday, there'd be a pin process, meaning I developed the screw you phenomenon, which was, if you take the time right now to go over to Yahoo and look on the Yahoo page for options on Tesla, you'll notice that, let's say at 700, there's a large group of people who will buy options or sell options right at that dollar amount. So one of the things I noticed just by casually watching the data over a couple of 3 years, was that every time a Friday showed up, there's a process where market makers had the ability to shift the stock price of certain companies a certain distance in order to make as much money as possible. The case example and reason I bring it up is this Friday, there were 34,000 calls on Tesla while there are 1,800 puts. At 700. So what this meant was that if in fact the market makers could keep the stock below 700 on Friday, this past Friday, they make something like 5 to 10 extra billion dollars. If the stock price finishes above 700, they lose that money. So this is one of the trading areas that the large firms use as a profit center. And if you go back on Tesla's stock price over let's say the last 3 or 4 months, there's been maybe one Friday every 8 weeks that the market makers don't control the stock price to optimize their interests, which is to make a lot of money and make sure smaller investors investing in those options, or even bigger investors, lose money on that trade. And so something just happened on Friday, which was, I think, amazing. With a huge number at stake, like I think it's at least $10 billion, maybe $15 billion of options sitting out there, the market makers who usually win by dropping the stock price, it had gotten up to 715 of Tesla, dropped below 700 to 698, and then it finished up at 705, 706 that you saw. Well, what I call that is the market makers getting run over. That's a very rare occurrence. For those guys, they have all kinds of money, all kinds of ways to manipulate the stock price to get what they want. But they lost on Friday. And this was a shocker to me, because these are some of the smartest, best capitalized people in the world. And they actually took an L on a very, very important, very large trade. So for us, what we're looking for right now is establishing new patterns after the S&P in terms of how Tesla's going to trade and what might happen on a weekly basis, because you can invest in the stock, and that's a safer way in the long term. But by trading it, there's actually a lot of money to be made there if you're able to anticipate what the movements might be, and sort of focusing on Fridays and understanding how they work is a good deal. So what we've noticed, again, if you go back to the pin process on Fridays, usually if the stock is pinned on a Friday under a certain number, let's say 700, usually on Monday, you suddenly see an updraft. So the trading that should have occurred on Friday in terms of where the stock price should be will all of a sudden show up on Monday. And it's over the last 3 months, I'd say that little trade right there, if you traded it every Friday by buying at 3 p.m. and then selling at the open on Monday morning, from an option standpoint, it has been on 90% of the days, it has actually turned out to be a 200% return on your money from options that are in the money. So I'm sort of getting way deep technical into playing around with options. If you're interested in this, I do have some lectures on it, and we do some one-on-one coaching. If you'd like some information on that, just drop us a note on Patreon, or you're welcome to send us a note on our Facebook page under Teslafaninsight. We're happy to dialogue with you there on that further. But in essence, there's a lot of money to be made by those that take the time to watch that Friday activity into Monday and try to trade it. So all this is sort of a build-up to an interesting position we're in right now. I mentioned Peter Lynch because one of the issues that comes up when you trade is what's called value investing. What that means is that basically if I said to you, here's a share of Tesla at $300 a share, or if I said to you, here's a share of Tesla for $700 a share. Well, if it drops down to 300 in the next couple of days, there'll be a lot of people buying the shares there because they consider it a great value. On the other hand, we're at 700 now. So if you want to get a feel for where we're at, we started last year of 2020 in the $300 range, 270s on the low for Tesla probably. And we're now at the equivalent of $4,200 a share for Tesla stock. Remember, there was a 5-for-1 split, so you have to take the current number, divide it by 5 to see what the actual price is based on where we started last year. So that's been a great run. There's been a lot of money made, a lot of millionaires made in the group, and we do have a number of people that watch our show that have benefited from this activity. The key question, though, is what does the future look like? And what's been happening for me is that I've been watching and going, oh, I can see the data points, but the reaction of the stock is inconsistent with what we've seen previously. So, for example, I thought it was an amazing pin to see the stock price not rise with 200 million shares traded plus 2 weeks ago Friday, or the 18th of December. It was amazing to see there be little or no movement. I think we understand how and why happened there, but the extended time that was used by the S&P kind of helped that whole situation for the market makers. Now we're in the position where we're beyond that, and there's still clearly buying going on by those who have to fill out their portfolio relative to compatibility with the S&P. I think that's obvious. The next issue, though, is there seems to be a civil war going on between some very rich people, market makers on one hand, and the large firms who trade in and out and are profitable from doing so at the same time. And I believe that the war that went on regarding the pin session on Friday illustrates two different opinions. So there's one group of people that are trying to buy the shares. The increase in the stock price illustrates the fact that there's an increasing demand for those shares that are greater than the supply of people that are willing to sell out. The other piece that's going on is that there are a lot of people who shorted the stock who are expecting it to drop dramatically, and the main reason was the lack of the pressure to enter this S&P demand for Tesla shares. So I believe that the next 2 or 3 days of trading are going to be some of the most explosive for Tesla's stock price. And the main reason is that if, in fact, the Democrats win the Georgia primary, I think it adds at least $100 billion to the market cap of Tesla. And so what we could see in my mind is, number one, solid earnings relative to the number of units sold for the year. Number two, demonstrated increasing demand for Tesla's products that are illustrated by the now, call it 200,000. So from what I can see, if we add up where the numbers were in the June timeframe to the most recent burst in Chinese demand, I think that the year's production from a Model Y standpoint in China is sold out because of all the people that want it, and they can only produce 500,000 cars, and theoretically, let's say 40%, 50, 45% will be Model 3s, the rest will be Model Ys. And I think that with the pre-orders and now recent orders, I just think they're backlogged, and they're going to have a hard time keeping up with that. So what this suggests then is that Tesla is in a 1 million car plus sell zone for this year. And I think that as the analysts bake all those numbers in, what they're doing is saying, oh, if you guys are demonstrating you have demand and you can produce X, Y, and Z, they have to modify their numbers to embrace what Tesla's going to do. A really dumb sidebar to this is that I thought was interesting is that when you look at an airplane, the first class cabin of an airplane represents 5% of the seats, but 35% of the profits. And I bring this up because one of the data points I've always been fascinated by with the car companies relative to Tesla is everyone always points out the number of cars that are being sold. What they don't discuss is the fact that most of the car companies, particularly domestic, are making little or nothing on the small vehicles they sell, and all their profits are on SUVs or the higher dollar vehicles in their fleet. So as Tesla comes after those big profit centers, it might not be a large number of cars they're selling, but Tesla is actually striking at the heart of the most profitable segment of where the auto industry is. Hence, they can have a lot more impact on the viability of other companies because those companies rely on the low volume, high price, lower volume, but higher priced vehicles to make any money. And Tesla's sort of attacking it from so many different ways as we go forward. So it'll be fun to see how this plays out, and we'll be all over it in terms of coverage. So I wanted to review in general all of this because the question mark is, where are we going? And the answer is we could be going to 500 or we could be going to 1,000 a share for Tesla. Both are on the table, but you can see now in that we're all reliant upon what are the analysts are going to say relative to the productive capacity of Tesla and its success. And how does that impact the stock? Because their recommendation to their large institutional holders will trigger either a very heavy buy in the shares here or possibly a neutral or on it or possibly a decline. I believe where we are portends a nice 10, 20% increase in the shares of Tesla over the next few weeks. But I want to make sure that I leave the case out there for the fact that, frankly, it could be the opposite direction. And the reason is that Tesla has a very high PE ratio multiple right now. And in essence, we're what's called pegged to perfect performance. There are really two phases of what we're looking at right now. How did Tesla do in terms of its numbers? And we saw that those were very good at the top range for all the analysts. And I think there are a lot of people that are going to have to upgrade based on the numbers that Tesla just produced. And the second question is, how do things look out 1 quarter, 2 quarters, 3 quarters, 4 quarters, et cetera? And there's an ocean of new products. Cybertruck, for example, this semi is not here yet, but the Cybertruck plant is being built. And as we watch the China numbers go crazy on the Model Y, I just think that there are a lot of people that have to acknowledge that Tesla is about to sort of have a roaring sales period as we're going into this zone. So we'll find out what the answer is to it, but stay tuned because of the election. I think it may go Democratic. Elon and company gets a huge boost from that. And if that occurs, do not be surprised if we see a mega blowout increase in the value of the shares heading into the latter part of this week for that reason. So we'll keep you posted on this. We look forward to your comments on all this going forward. The next segment we usually do is our health tips. Don't forget 25 leg lifts per leg, strengthens the quad muscles, reduces the chance of knee issues. The second is prior to lovemaking, don't forget very small meal like a salad. The blood flow from digesting that salad would be very low, and it leaves blood flow for other activities, so something you might want to consider. The third thing to consider is no more than, from our kidney doc, no more than once a week fried foods. reduces the chance of type 2 diabetes, etc. Number 4 would be 30 SPF or better. I guess number 5 in this case would be do not go to bed within 4 hours of eating, minimum 2 hours, because the digestive acids that would digest that food will digest the food prior to going to bed versus digesting you after you go to bed. And that was recommended by a University of Louisville upper respiratory cancer doc that we met. So a few ideas to consider in process. At any rate, we look forward to your feedback on this conversation, constructive feedback. Do not forget to like and subscribe. This is Greg for Teslafaninsight. Tschüss German, au revoir French, Lehit Road, Hebrew, Choda Hafez, Farsi, Strachvich, hello in Russian, Hey Do, Swedish, Namaste, Hindi, Konbanwa, Japanese, Ni Hao Ma, Chinese, hello, and Dobrajenia, Polish, and in Jamaica, we say, Nuff respect, walk good. Thanks for joining us. Have a great day, and bye for now.